truth.
You can't handle the truth. Guys, what's up? Welcome to the morning market report. Right now, a lot of red going on. Is the worst over? I saw someone say, no, it's not over, in my opinion. Guys, I talked about this yesterday on the show. I talked about this everywhere yesterday. Everywhere that I could talk about this, I said, what I'm worried about is that we reject on the 786 of the platinum pocket and continue lower. And that is what I think we've got going on right now. Money flow is still heading down. We're bouncing exactly where I told you guys to. Hey, welcome to the Piper Academy, where we get, 30 viewers, but give out the best information in the industry on chart price action. I don't know what to do. We'll just be fine. This will be the smartest group of freaking people on the planet will be the ones that join us here every morning. And everyone else is just asked out. So it's not my problem. I put it out there. If they don't know to come listen, you can lead a horse to water, but you can't make it drink. Or you can you can lead a human to water, but you can't waterboard them. I think that's what they told me. I don't know. Anyway, gosh, you know what time it is. We got a lot to go over today. We're going to talk about M2 money supply. We're going to talk about where this price is going. And on that thumbnail, as we showed you, there's some things that I need to see before the bottom is in, and I'm not seeing it. So let's go ahead and get it. Get your notebooks out. Alexandra G, get your trap keeper. And everyone, let's do this. You know what time it is. Class in session. See you on the other side. Let's go. All right, good morning, everyone. Welcome to the Morning Market Report, brought to you by Chart Prime, the best indicators in the industry. It's what I use, it's what OC uses. They work. I don't need to know how they work, so don't ask. Just like my brakes on my car, I don't need to know how my computer does everything that it does. I just need to know that when I push the pedal, the car stops, right? So, guys, let's go ahead and bring up my co-host. Couldn't do the show without him. It's not the same without him here. The Mexican Superman himself, King of Spaghetti. What's up, OC guy?
Hey, what's up? Not much. I don't know about you, but when you lead me to water, I desperately want to swim across it. I don't know why.
It's the Mexican in you. It's
genetics.
Just cross the river into America. It's so easy. Hey, there's water there. Let me walk across it. It's the Mexican in you. I get it. Who doesn't want to be here and deal with, our great politicians and all of our high taxes and our shutdown government?
Right.
Shout out to the Otter gang joining us in the house. I appreciate you, man. Otter, Price, Piper, and the OC guy. What is up, fam? And O'Reilly? Oral, I don't know. Blessings for y'all. Appreciate it. Alex O Crypto. We got the otters in the chat, guys. Drop the otters in the chat for Alex O. And look, just like that. What's that?
Converted, but I still got that one. Let me see. Can I do it? Oh, come on. No, for some reason I messed it up. Yeah. Oh, well, whatever. I'll just bring it up before or after.
Okay. All right. Well, let's go get into this chart over here. I'm going to actually start it off because yesterday we talked. Oh, wait. Do it again. Otter, see? There it is. Otter's in the chat. There you go. Yesterday, Trapper Keepers are $21 on Amazon. Glad prices are way down. There's no inflation. There is no inflation. That's all made up. Yesterday, guys, we talked about, look, we're getting this bounce. Yeah, we did a nice little tweezering down here. Got the VWAP that said, hey, look, we're going up. It's oversold now. Breakout to the upside. I said my concern is that our 786, and I even gave you guys the exact level, 104,232. That we go out there and get a rejection and come back down. What do we do? 786, platinum pocket. Now, the question is, do we hold the 887 at 101,397? Does this hold here and send us higher? This was our rejection, because we do that sometimes. We'll come in, it'll reject off of a level, come back and retest, and then bounce higher. So that's going to be the next thing that we have to watch. That it got a rejection here, it comes down to the 887, and then it heads back up to the platinum pocket. If it doesn't and it breaks here, guys, probably heading a little bit lower. The one thing I'm watching here is our MVP oscillator on the weekly. We haven't gotten any green candles printing on the bottom, telling telling us that, hey, this is done. We're ready to head back up again. We're not getting any. So that's what's on the thumbnail. There's a circle here with the circle here, and then there's a circle here with the circle here. And I need this to look like that. And I need this to look like that. Okay. So that's what I'm really watching for right now. We are seeing a continuation of the histogram. Money flow is coming down. We still got a ways to go on the RSI prime. I don't think that the bottom is in yet. If we do, and I'll go over the high time frame step in a little bit, we are breaking below that 52-week SMA that I warned you about. Instead of we need to stay above this on the weekly, we are heading back below that also, but we'll talk a lot more about that. Let's go ahead and get it over to OC and see what OC's got going on here on the local and what he's watching on the Bitcoin chart. What do you got for me, OC?
All right, so let's take a look at here. This is where we left out. I was expecting a little bit of a farther pushing here. We can still get it, right? But right now I'm starting to doubt a little bit if we're going to get it there. In fact, if we go to 30 minutes, that's where we are actually left out. We are bouncing off right out of the dynamic reactor. Let's just wait for TradingView to wake up. All right, perfect. So looks like we have dynamic reactor. We have the reversal. There we go. We have a bounce on the reversal, creating a bullish flag so far, right? So we haven't had like that huge reversal still. We're making kind of like a bull flag. So far, it could still be considered as a bull flag. And the important part, there it is. Look at that. We are, yes, slightly bearish. We're losing that momentum. But if we are able for some miracle to come back up and have that reversal signal, well, we already have that double reversal, and we could be making that comeback up. All right, that would be plan B. Continuation to the upside target. That would be, oh, come on, let me stop painting. Target somewhere around 109, 110. All right. The important point, and let's go back to the 4 hours. This is when things are starting to get a little bit fussy. All right. And before I move out of here, let me go over the plan. If we start bouncing up, all right, remember, this is plan B. But if we start bouncing up and we start breaking stuff, all right, we're going to be going for a BOS trade. Remember that on a BOS trade, you could be buying the top, so just be careful about it, right? Or wait for your breakout, retest, and continuation, because as I always say, it's not about the breakout. It's about your retest, right? So right here on the way up, jumping back out of that resistance, having that support back on the oscillator, all right? So let's go to the 4 hours and see where the issues coming ahead. Because it seems like we are walking on quicksand. And why is that? Despite we're having this bullish flag, right? And we have the top of our calculation speed, or top of our trade being at 109, well, then we're starting to see a little bit of something that I don't like, which is a curling out of my oscillator, right? Right in here, 4 hours. Look at that. I would like to see it like this, almost straight and flat out of that zero line to the upside, right? But instead, look at that. And let me make it a little bit thicker. There it is. So it seems like it wants to do that, right? And if we do that, and I believe that that could be much intense or much faster, well, where we are right in here, like in here, that's when we're most likely going to have a retracement, a strong continuation, right? So just be warned, I think this is a great area to start trading with 30 minutes, right? Especially if we start losing that support. So since we're very close to that support, I'm just going to move it slightly to the downside, right click, lock it in place. Again, right click, add an alert, right? And create it. Also right click, lock it, and right click, oh come on, and add an alert. Where is it? An alert. So here's what I want to say, guys. I'm trying to give you, oh man, it's moving, trying to give you in-show trades, right? So very important with the in-show trades, I'm looking for every possibility for it to either go up or down. So always be careful when I mention danger Will Robinson trades, because they could be going against you, right? So right now, I was just about to take a long in here as we were hitting the support. Right now, it already has moved on us, so we cannot longer take this, all right? So what a bummer. I was about to call it out, but it is already too late, all right? So let's just give it a second. Again, let's wait for maybe that flip of the rebound at the bottom. And if we're able to, we can catch it from the bottom to the top, TP number 1, and then hopefully have a breakout retest continuation. If not, there you go. We have the next possibility, which is the most probable. At 4 hours, let's go, let's get it. And our next target would be right here at 93,900-ish across this huge trend line. So warning, warning, Will Robinson, because danger, danger, Will Robinson, because right here, 494, it's on site, coming out of the horizon. So let's be careful at these areas, but I believe that we can still make money either to the upside or to the downside, just waiting for some breakouts to happen and taking those trades. So let me throw it back to you, Piper, and let's see what's up with the news.
Yeah, absolutely. Yeah, and that 93, 94,000 level you're talking about down there, there's a CME gap down there too, which we'll show you guys here in a bit. There is a CME gap from April 22nd of this year that still has not been filled. So keep that in mind too. Let's go give a shout out to the chat. We got a lot of people in here. BC Port Corp, JR, Dave Digital, Alexandra G. She dropped 5 memberships for everyone. So thank you very much. And welcome to the alumni. For those that got that, I also threw some out there too. So yeah, we got 10 new members today. Appreciate you guys joining. Robert Mulligan in here with us. We got Jesse Gellick. I saw Lunar Beaches Crypto Coin Mindset, the whole Otter gang, Wix Wife Fine 89, 2Dub. I appreciate all of you guys. Brumblebee, I saw him in here. Little Fish. I appreciate everyone that joins us here. You guys are all awesome, man. Appreciate the alumni and the Otter gang. New members, jump in Discord. Link your still too expensive. What's too expensive? Our membership, it's $5. $5. It's the cheapest you'll find. Piper knows if he doesn't say hi to LBC. Yeah.
Not even Netflix, man.
No.
You get more
cheaper
channels.
than a cup of coffee. It's cheaper than a cup of coffee. Or it's about 2 gallons of gas in the US. Ryan Smith, welcome. Bingo bango, he said. All right, guys, let's go jump into the news and get all this going here. There we go. The news. Member for 21 months, way too expensive, bro. I appreciate you. XAU Crypto, if you don't know, I voted in the New York elections, and you know who I voted for. No, he's been throwing lies out. Lies. XAU Crypto is lying about RB Piper, guys. He said I voted for Momani or whatever his name is. Not a true statement. Anyway, looking at the crypto market cap today, guys, we got $3.39 trillion for the crypto market cap total. Trend on this is at $4.618 trillion, meaning that the fair value of where we should be at right now for crypto, to the total crypto market cap should be about 4.618. And we are currently 26.6% under that, 26.59 if you want to be exact. But looking at the wristbands on Bitcoin, we are currently sitting at 46.6% for our wristband. That means it's 3x DCA. How about Bitcoin dominance? Looking at Bitcoin dominance here with stable coins, we're at 59. Let me adjust that a little bit. That's a little bit off there. There we go. 59.89 with stable coins. Take away the stable coins, we're at 65.54%. How's the altcoin season looking? Not too good, guys. Not too good. Continuing. I told you guys we're going to go down to Bitcoin dominance. It's going to be down in the 25% range here for altcoin season index. We're at 39.13. So you guys notice how much longer we spend in the lower band here of Bitcoin season than what we do in altcoin season? You guys see that? Way longer. Way longer. All right. Looking at fear and greed index right now, we are at we're out of extreme fear at least. But hey, here's some good news. We are losing Pelosi on here. You'll get rug pulled. But yeah, we're good right here, guys. Here we go. Yeah, Nancy Pelosi retired from Congress on her current term. There you go. Kavisi letter. We're looking at breaking U.S. employers announced, and we're going to talk more about this. 153,074 job cuts in October, marking a plus 175% surge. It's the highest for any October since 2003 per Challenger Gray. Employers cite cost cutting and AI as the primary drivers of these cuts. We need more rate cuts. So seeing this, I do think that we are going to see Nancy making a trade, Alex said. I do think we're going to see rate cuts on this, but I also think I also have an article talking about this this AI. Everyone's saying, "Hey, we got rate cuts or we got job cuts, and it's because of AI." We're going to talk about this. There's a bill that's being proposed that will make companies show me the proof, show me the receipts. Let me see this AI caused this. Okay. U.S. households' debt surged $197 billion in quarter three 2025 to a record $18.59 trillion. So as we're losing all these jobs, guys, household debt is racking up over $642 billion over the last 12 months. Surge was driven by mortgage debt, which rose $137 billion to a record $13 trillion. Credit card debt climbed $24 billion, an all-time high. Student loans jumped back $15 billion. Auto loans remained flat. And then Americans are piling up debt at a rapid pace. Rapid pace. Today's tariff ruling. If you guys don't know, we got a tariff ruling. I got an article on this, but this could be very bad. I'm going to talk about the impacts of the markets. And then if you guys haven't seen this, play the song on the bull market ends. And this is pretty funny.
Most of the people who are buying assets at some point want to sell the assets at a profit.
People that use fiat currency as a store of value, we call them
I'm doing my part. Gotta play this on the bull market ends.
People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor.
People that use fiat currency, we call them poor. Yeah, guys, play the song. Play the song. It's over here on X. It's from the Bitcoin Therapist. Play the song or the bull market ends. I did my part. What else we got over here? Let's go take a look at when does the government reopen? It's a great question. Open club. I love it. We call them poor. Guys, November 15th, that's when the government's going to reopen. As of right now, that's the highest likelihood. November 8th through the 11th, 21% chance. November 12th through the 15th, 31% chance. Look, November 16th and beyond. November 15th, 16th and infinity, 47% chance that it happens then. This is insane. And don't forget, even if they reopen the government, if they said, okay, we approve some funding. Here's some funding. The government's fixed, right? November 21st is when that funding ends. If you don't know that, a lot of people don't know that. This funding they are fighting to approve right now only carries us to November 21st, and then we get to do this all over again. Can we get an applause in the chat? There we go. Awesome. Appreciate it. Until Sailor has to file bankruptcy, we call him poor. I love it. What's that contrary trader? How you doing, man? Let's take a look at the TradFi stock market. What a crazy day. Dow Jones is currently down 0.6%. S&P is down about 0.5%, 0.46%. And the NASDAQ down 0.86%. Russell 2K down about 0.9. And the VIX, the volatility index, over 17, pumping higher, 18.87. That is where we are right now. So that means a lot of volatility in the markets. Let's take a look at the bonds markets moving back down again, 4.091. I find it interesting that the 10-year treasury yield pumps up just before they put out the 30-year fixed rate mortgage and then comes back again. It's kind of tinfoil hattish, if I have to say so myself. What else we got here? Gold. Gold is down today, just slightly. It's flat, 0.01%. Still sitting at $3,992, creating a little bear flag on the chart. Maybe you'll see you take a look at gold for us here in a little bit.
I love gold.
Yes, we do. Silver sitting at $47.89, down about 0.25%. Copper is in the red. Platinum is down 0.5%. And palladium down 2.28. Oh, look, gold's just like that. Gold is green again. Like I said, it was pretty flat. In the past 24 hours, we've had some liquidations. 173,227 traders got liquidated. Total liquidations coming in at $348.8 million. Largest single liquidation was on Hyperliquid. It was a Bitcoin trade. OC did it. OC made this trade. It was for $15.3 million and he got liquidated on it. OC, I told you about that. Oh, look, we
at the
turning
bubble.
green. We turning green. Oh my goodness. We're turning green on here. What is going on here? Green on the hourly, green on the daily. Bitcoin, they're down right now about 0.3%, but Ethereum's up on the daily, still red on the hourly, but still up on the daily. XRP is up 0.6%. Other big movers, let's see here. Zcash, you got to be kidding me.
They don't know what the fuck they're doing.
I don't understand this thing, man. Zcash up 10.4% again, down 3.1% on the hourly, but still up 10% on the daily. This thing is just will not stop. Where's Dash? Where's Dash? Go to Dash. Dash up 13.7. What I knew it. I knew it. And look at this thing. What is this AIA OC? It's up 31% here on the hourly, 216% on the daily. Oh, good Lord. See, this is why you guys don't get, this is why you guys are not getting alt season right here. Just so you know, this is why you don't get alt season, because it just flushes out of one thing and into another. It's not going into everything. It's not all alt. It's in this like isolated things. Yeah. It's pumping, right? There's a pump and then something else will pump next, right? And that's where all the money's at. Dash is on fire. It is. Impact. Trading economics calendar. What do we got today? A bunch of people speaking. That's it. Tomorrow, we're going to get Michigan consumer sentiment coming in. Right now, expected to be lower. So, meaning that people don't have a lot of faith in the economy. Job cuts in October hit the highest level for the month in 22 years, guys. We just talked about this over there, the 153,000 jobs, 183% surge from September, and 175% higher than the same month a year ago. It was the highest level for any October since 2003, and it's been the worst year for layoffs since 2009. And that's really the only reason you're getting rate cuts, because inflation's not going anywhere. We can feel it every time we go to the grocery store. The only reason we are seeing rate cuts is this, which means that they may be ending quantitative tightening, but that does not equate to starting quantitative easing. And we'll talk about that in a second here. We're going to get into the M2 money supply with a 90-day offset. We're going to get in and talk about reverse repos. We're going to talk about bank liquidity. We're going to talk about what does this mean for the markets, because a lot of people are talking out their buttholes about what this means for the markets, and they don't understand how it works. They don't know what the F they're doing. So we're going to break all that down for you in a bit. 2003, a disruptive technology is changing the landscape. AI. Okay, so cool. It's this AI thing. Let's see if you can back those numbers up. I think personally, I'm going to go over here for a second. I think personally, what we're seeing are these companies having to cut because of profits, right? So they're just cutting jobs. We got to cut jobs. We got to cut jobs. And they don't want to say we're cutting jobs because business is bad. The consumer is not buying as much, because then that would shake the markets a little bit and make them scared, and people would sell their stocks, and their stocks away going up. So, I think that they're using AI as a massive excuse, because I don't see how AI is replacing all these jobs yet. Let's be honest. We've seen how good AI is, right? I don't think AI is replacing all these jobs. I think that what is happening is these companies have to cut overhead because they have less profits. And in order to not crash their stock, they have to tell people we're cutting jobs because of this reason, not that reason. It's an excuse. And so this bill, OC, this bill is going to stop that. And we'll bring it up here, and I'll bring you up with me. New bipartisan bill would require companies to report AI job losses. Senator Mark Warner, Democrat from Virginia, and Josh Hawley, a Republican from Missouri, I think the MO is, on Wednesday announced a bill that would require companies and federal agencies to submit quarterly reports of AI-related job effects. New bipartisan bill would seek a clear picture of how artificial intelligence is affecting the American workforce. It would require publicly traded companies, certain private companies, and federal agencies to submit quarterly reports to the Department of Labor detailing any job losses, new hires, reduced hires, or other significant changes to their workforce as a result of AI. The data would then be compiled by the Department of Labor into a publicly available report. This bipartisan legislation will finally give us a clear picture of AI's impact on the workforce. Armed with this information, we can make sure AI drives opportunity instead of leaving workers behind. I'm all about this bill. I think it's a good thing, but it's also going to force some transparency coming from these companies because you shouldn't be lying to the American people and telling them, look, everything is fine. We're just moving these jobs to AI when the facts is that the economy is sucking your profit away. And how do you show higher profit margins? You go, I cut these jobs out, and that was reduced overhead, which left profit in that spot, right? And instead of saying what it really is, you're just making AI as an excuse. So that's what I think. That's what I think. The only reason people think AI is dumb is because they're still using ChatGPT and not Grok 4. I think all AI still needs people, and you're not replacing all of these jobs. You're not replacing 157,000 jobs in 1 month with AI. Just not my opinion. I don't think that's happening. So, I think a lot of these job cuts are coming on the backs of just we have less demand and we are cutting cost. So, 2008, 2009, we saw the same thing. We got a lot of the same indicators on the macro side for what's going on in our economy versus what was going on in the economy then. And guess what? Those job numbers that were the worst since 2009, see the comparison, didn't have AI. It was bad economy. And so they're trying to soften the presence, the appearance, and they have an easy out. Blame it on AI. Consumer debt, K-shaped economic divide. If you guys don't know what that is, you can see the K. See how one goes up, one goes down? That's poor people. Lower income, upper income, okay? And we're seeing a massive split right now on how much debt people are carrying on each side. Americans are falling deeper into debt, but not across the board. Collectively, credit card balances rose about $24 billion in the third quarter. The average credit card balance per consumer now stands at about $6,523 or $23, up 2.2% year over year. However, despite the overall uptick, there's a growing divide among consumers. Some demonstrate heightened financial resilience, while others are facing mounting challenges. A divergence in consumer credit risk. So those with the credit score of 780 or higher, and those with a credit score below 600, that gap getting much, much wider. And we're seeing the numbers start to percolate up or trickle down. FICO scores ranging between 300 and 850 is what they looked at there. But yeah, K-shaped recovery there. K-shaped economics. How are we looking on Moon-vember? It's a great question, OC. Let me check it out. 3.69% was our downside in October. Last time we had something in that range, guys, back here in good old 2018. And we saw 36.5% downside in November. We were warning about this before the end of October ever happened. Currently down 5.68% for November. And then lastly, tariffs are facing an uncertain future today, guys. After the Supreme Court hearing, here are the potential market impacts. Congress can only tax, not Trump. There you go. That's. I say I don't understand how anything works on these different avenues of funding and finances. With the dude, get a job, go to work. The Supreme Court tariff hearing Wednesday provides the biggest legal and policy challenges for President Donald Trump's administration. Economic fallout will likely follow. And it's complicated. The U.S. top court heard arguments on whether the White House can flex its tariff muscles under the International Emergency Economic Powers Act. Whew, that's a lot of words, which allows the president to regulate international commerce, but does not specifically authorize tariffs. You can add to, but not take away from. So I've heard that somewhere before. But speculation's already running rampant. Will the court throw out the tariffs entirely and force the administration to issue rebates, aka refunds, to importers who have had to pay the duties? Will it allow the levies to stand, thus expanding executive powers over the trade issue? The justice cast doubt during Wednesday's hearing that the tariffs are legal. So this is why we're getting some sell-off today. It's not market makers. It's not the composite, man. Guys, it's this. At the same time, Trump administration officials have asserted that even if they lose the Supreme Court, there are other legal provisions that they can employ for tariffs. What happens next? Traders on Polymarket were assigning a 26% chance that duties will be upheld. Paramount among them will be whether the court will take the next step and make the administration refund any tariffs that have already been paid. And of course, that's going to have a drastic impact on the markets themselves. I'll say that if this happens, we're probably going to see even deeper crash. And we're already looking at Bitcoin being in bear market territory. If you look at what is technically a bear market, is a 20% retracement on markets. Of course, for Bitcoin, that's freaking Tuesday, right? But yeah, it's already in bear market territory. But if we start to see bear market territory on the stock side, guys, Bitcoin tends to double the movement of downside on the stock market. So if something shakes out TradFi and we see a 20% downside on, we see a 20% downside move on the S&P, for example, or the NASDAQ, we're looking at a 40% downside move on Bitcoin. If you don't believe me, go back and look at COVID-19. You'll see a 30% drop versus a 60% drop. And that pretty much goes across the board on any of the big pullbacks that we've had stock market wise. So when we see that happen with S&P, just double it in that ballpark-ish, double-ish, you'll see that we're looking at that. OC, so the market will be rolling over till the government opens and taxes are stable. Yeah. Right now, I think that that's the case. The stock market has the potential to do that, but you got to remember, we're still getting these reports coming out like this ADP job numbers that we got and stuff like that, and that showed that it was not very good. So very likely getting rate cuts now in December. There is nothing in November, so just keep that in mind. Oh, see, let's go take a look at the charts, and then I want to come back and talk about money supply, liquidity, reverse repos, M2, and all of that good stuff. What do we got on the charts for us today, bro? You're muted.
Oh, sorry. So let's go take a look at the charts. And as you also scroll down, I was also looking at the screen and look at that. AIA. Don't know what the hell is this doing, but look at this. It's just not stopping. Really quickly, guys, don't fall for this. If you jump in, or do it with casino money, because right here, well, there's no way to call out some tops in here. I mean, we can show some Fibonacci, but as you can see, we are in price discovery. And this kind of movements to the upside, they tend to have a pretty bad result when you decide to jump in, right? So, for example, look at this one and then rejection, right? This one rejection, this one rejection, this one rejection, this one rejection, right? So I think the story is going to be a little bit of the same. And when we get the rejection, maybe we can jump in for just to wait and try to get another rejection. But I think that you are right at saying, hey, this kind of coins right out of the nowhere, drawing that or whatever liquidity is left, is actually preventing the icon season to actually be on good worth it coins. So far, once again, I don't know what this AIA coin is doing, but it's pumping. All right, a couple of other stuff that I have in here. It's ICP. ICP is doing fantastic. As you can see, I had a alert in here. Why? Because I was looking at this range somewhere around here. I was expected to have maybe some sweep of the lows and then a continuation upwards. The sweep of the lows was not taken, but we have the breakout retest and continuation. So just so you know, we are having a retracement right now on ICP, and I'm looking for a possible continuation once again. We have, there we go, a trend line, but more than a trend line, a parabolic movement in here, a parabola. So let's go check that out like this, and I think this one will make a much better result for the parabolic movement. So far, this is what we got. It's actually playing out very nicely. And we already have a peak performance. Yes, we're pushing higher, but also we are retracing and we're having our, there is leading indicator being flat. So let's wait for a possible long entry here. And the long entry will be, let me bring up my indicators here. I know all at once. But that's just to save some time on trading view, having to load one at a time. So let's go wait it out. We still have more two to go. There we go. And I think despite there is a big spaghetti, the very first resistance or support, it's right here. And the very next one, it is somewhere around there. So remember, we can still do something like this, right? Create a little bit of a triangle and then decide whether we want to go. So far, our next possible opportunity is going to be somewhere around this area. And I'm going to add an alert at 6.305 to have a little bit of that buffering in between the price action going lower or going higher. If I start ranging in here, I'm gonna add another alert right here at 688. So I know that I will be ranging this area and I could be taking advantage of that. So far, looking at ICP for a possible entry. Keep your guys peeled because in 30 minutes we might have a result for today at night. So sorry, yesterday, guys, I had an unexpected meeting. I'm gonna be, how's that called, honey? Godfather? They coming to be Godfather? I don't know. When my sister got a baby and she asked me to be, I don't know how you
the
call
Godfather.
it. Godfather?
The Godfather.
Yeah, the Godfather.
I knew it.
So-
I knew it. Mafioso as hell. He's the guy. He's the, let me tell you something. I go down to make with you, okay?
It's not about the breakout, man.
It's about the retest.
And I will have to be traveling to Cozumel this weekend, which means yesterday was the last day that I needed to go, to the church. I'm a little bit religious and need to go to the church to, send my papers, everything straight. So yeah, I mean, that's why I was not able to take on yesterday's class. But today we're going to be visiting that and also Bitcoin, because I'm also looking for a possible continuation on Bitcoin. But yeah, I think that's what I got on ICP. Do you have anything else that you're looking at?
I do. I'm actually looking at, I want to go over this M2 money supply chart so I can squash people's hopes and dreams. No, I just want to set people straight. Like, people are just all over the place on this stuff. So, but yeah, congratulations. I knew you were the Godfather. It's not about the breakout. It's about the retest. I love it. That's great. That is great. All right, let's go talk about this. So you guys see these charts here? They're all over the place. M2 money supply. Global M2 is exploding. This is 1 hour ago, by the way. 1 hour ago. Global M2 is exploding. Bitcoin will follow soon. You guys see how we kind of stay in lock and step on a 95-day offset of M2 money supply, and everyone thinking that this, but look, here's another one right here. Who would have predicted that M2 Bitcoin chart would fail? So take a pick. Is it failing? Is it about to happen? We got some clarity on it. I want to talk to you guys about global liquidity. I want to talk to you guys about the bank situation, and I want to talk to you about the Fed and their reverse repo chart. The Fed just did it again, another $24 billion injection into the U.S. banking system. That's $125 billion over the last 5 days. And so I did this whole breakdown. I said, let's talk about, I'm just scrolling through to get back to where I need to be here. Let's talk about the M2 money supply chart. See, there you go, how it fits into this. And let's talk about the repo charts, and let's talk about the banks. Is this the bottom? Started at the bottom, now we're here. No, we're way down here. Okay. Pam's final take. Get off of there. What are you doing? Stop it. Okay, so Pam's final take. Here we go. All right, Army Piper, here's the so what, the real world takeaway that ties all this together. The M2 plus the 95-day model, the reverse repo plumbing, and the bank reserve paralysis. Let's go full morning market report mode, concise, narrative, tactical. The data we have, M2 money supply, the macro liquidity tide, okay? Modestly rising again. Implication, structurally, the tide of liquidity has turned less tight. Crypto effect with a 95-day lag. Historically signals a bullish inflection roughly a quarter later. About 3 months, 95 days, okay? Reverse repos and standing repo facilities. This is short-term plumbing. Trends, recent spikes, okay? Implication, liquidity is being parked at the Fed. It's not circulating. That's what a reverse repo is. Signals, temporary liquidity drain, short-term tightening despite M2's slow rise. And then the bank reserves and their...
What, sorry, short on Bitcoin taken. Yep.
The short on Bitcoin was taken, OC says. Oh, yeah, okay. Yep, we're heading down to where I said we would. rejected where I told you yesterday we would, exactly, and heading where I told you this morning we would. So, let's go
Sorry for the
talk about
interruption,
this.
just one-
Hey, trade, man. Trade your money. That's what we're here for. Make some money. Bank reserves. I think we're here. We're here. All right, we're good. See, you start breaking it all down for them. You start unwrapping what's going on, and they block you. Twice now. I said Nancy Pelosi leaving, cut me out. Started talking about this, they cut me out. Banks are hoarding their liquidity to avoid realizing losses so they don't have to sell at a loss in order to have that cash that they may need. And so they're protecting their capital ratios by hoarding the liquidity. So the credit creation and thus money velocity stalls. So what does this mean? Liquidity does not equal money supply. M2 shows how much water exists. We're going to put this into an analogy you can understand. Reverse repos and reserves show whether the water is actually moving. And right now, it is, but the pool is refilling, but the circulation is being blocked from moving on. The 95-day lag model is under challenge. Bitcoin historically follows M2 with a 95-day delay, but that assumes transmissions work. Today's clogged liquidity pipes through reverse repos and bank hoarding means that the lag could stretch or flatten, and crypto may underperform the expected liquidity impulse. Banks won't loosen until they heal. They're protecting their capital, sitting on losses, and earning less than 5% risk-free or greater than 5% risk-free at the Fed until yields fall or quantitative tightening pauses. They'll hoard reserves, but not recycle them. They're keeping velocity low. So the final take, short-term liquidity stress equals choppy, range-bound markets, medium-term. Once the repo pressure eases or yields roll over, then the M2 signal catches up. Crypto could rally. We're looking at Q1 2026 window, OC. And in big picture, liquidity expansion does not equal liquidity access. We're in a trapped liquidity phase. The system is wet, but nothing is moving. So there you go. Right now, despite what everyone thinks on that M2 chart, if you hear anybody talk about the M2 money flow, tell them that they've got one piece of the entire equation. They're missing 66% of the math problem there, and they'll probably look at you like you got a dildo growing out of your forehead. So, but yeah, that's the breakdown for you guys of how all that fits together. Of course, I've been talking about this since the reverse repo came out, and then we got over into some other stuff, the banks, what their debt looks like, and then the M2 money supply. It just made me want to talk about this today. But yeah, that's the breakdown on that. OC, how are we looking on gold? And then let's go look at some alts, and then I want to come back and talk about the so what for tomorrow on Bitcoin. Let's jump it over to your chart, bro. What do you got for us?
Absolutely. Really quick before we jump into gold, while we took the Bitcoin short, we have a push to the upside and then right away push to the downside. And we're having some strength really quickly, some strength on the bearishness. Despite we are on support, I'm counting for us to have a little bit more of a sweep down. Look at that, as we were expecting. There we go. We're breaking right now, and we should be taking profits as we go down. Very important. When we close below this trend line, you move your stop to entry as soon as possible. But so far, that's what we're doing, all right? So you should be on this trade already. Not financial advice. Remember, this is a danger, Will Robinson. So keep it low leverage, low entry position, and let's roll with that. Let's go take a look at gold, and I had it right here prepared for you. There it is. So gold, we are in a break or make area, right? So we are at support, and we talked about this support zone. So buying gold at support is always a good idea, all right? Just having a stop loss, as always, it's important, right? Remember that we were talking about, hey, you know what? If we reject out of this area, most likely we're going to be going to the next support area at 3,800-ish area. Well, at this point, we have hovering in here and creating a triangle. So let's go over that triangle really quickly, like this. But we have not yet fallen, despite we are below the zero line, right? So once again, right here, we're getting closer to the rejection zone. Last time we had that rejection, we did went lower here, but so far we are tightening around this area. So we need to wait a little bit. If we have a breakout, well, then we most likely are going to go to the next support zone, and that is once again at 3,800. Oh, there is 3,830, right? and 3,800 ish sharp. So basically this area of support. After that, well then I think that's going to be my next entry for holding. And if we start breaking to the upside, well, like this, well, then be prepared, because most likely we're going to get somewhere around here. In fact, this is plan B. So this is my plan B. This is my worst case scenario, because then I'm actually expecting to have a bigger range in here throughout a couple of months, and then make a breakout, retest, continuation to the upside, as we have some uncertainty in the markets. But so far, we're having a little bit of the same pattern in here. Look at that. Having that sweep of the lows, and the next movement was to the top of the downwards range. Remember, at the top of the downwards range. So I believe that this should be more like in here, something around that. All right. So again, as we spoke about, well, whenever it tells you that this is a over, well, remember that every single time we have created that bearish flag or that little downwards range, and then a range for a little month. So is it gonna be different? Could be, but at this point we need to follow on what has been repeating and take break or make points, and we are right now on those. So keep your eyes peeled on gold, because if we start breaking to the downside, it's time to sell a little, or if we start breaking to the upside, it's time to buy a little. So that's what I got on gold, Piper.
Fantastic. Let's go talk about the battlefield plan, guys. Flashbang coming in. Flashbang coming in. You've been warned. You've been warned. Flashbang. Let's go take a look at the battlefield plans. We got to look at the battlefield plans today, guys. We have infiltrated past phase line 52. That is our 52-week simple moving average, guys. We are breaking past it now after a small retracement back. We fell back, regathered the troops, and now we are moving downward. Our next phase line, if we do not retake phase line 52 and phase line 618, and we've been talking about what all these are. This is our 618 fib. There's our phase line 66.66 fib, golden pocket, right? Okay, right there. If we do not take phase line 52, guys, we're heading to phase line CME. Just like on that battlefield, phase line jail, we're moving into the battlefield, deeper and deeper onto the battlefield. Phase line CME, this is going to be a CME gap that comes from April 22nd here, guys, and that is coming in at 92,224. Hate to break that to you, but yeah, if we do not retake this, it's not going to be a straight down line. We're not going to go straight to here. We're going to do some skirmish in here. Get some rejections, but if we come back down below this wick that we had here, and then over the next, these are weekly candles, the next couple of weeks, we come back up and we reject off of this 52, we're probably heading easily down to the phase line CME, which, oh, by the way, if we're going to do that, might as well consider that we're going to go down the phase line fair value gap, FVG. Why? Because we have a big candle of nothing here. Look, even here, no volume. These are big candles. We're just going to probably fall right down to that. And what's that coming in at? $86,000. So why do I think that that's the case? Let me show you. On the chart how this plays out for us when we break this thing. Lose the bull market support band, lose the daily dynamic reactor, becomes resistance above us, 52-week SMA there, OC retest down. It's not about the breakout. It's about the retest. Okay. Thank you for the Godfather. Back here again, last cycle, lose it all, come back in. Rejection off of the bull market support band quantum reactor. We come down. We're still on the 52. We're good. We lose the 52. That's it. This is going into COVID-19. Okay. Let's look at the last cycle, though. There we go. Cycle in, lose it, OC retest into the bear cycle. So this is why this is my stance on this right now. We need to keep above this 52-week SMA, as right now we're losing it. So if we continue this downside move here, that which gets wick gets candlestick, probably looking at 98 there. At that point, we're going to see what we're looking at here on the on the phase lines. Where's it at? Come back, baby, come back. Which is going to be the CME gap at 92,000. And what will change my mind on that? Seeing this right here, guys. You can see MVP oscillator on the weekly, MVP oscillators on the weekly. We're really not getting these bright candles that we need to get to say the bottom's in. I want to see bright candles come in here. That'll make me think differently. Right now, though, histogram's still coming down, money flow still coming down, volume still coming down, the ribbon's still coming down after multiple bearish divergences at the top. And then we still have quite a ways to go down on the RSI. So, of course, as I told you guys also, we have lost the 786 here, which we had not done this entire cycle on fib-based channels. So fib channels here, we have broken a key level, and now we have to look at that bottom side coming in at like $72,000 if this is, in fact, the crypto winter. So that's about all I had to go over today. I have nothing else. OC. But what do you got? Do you have anything you want to go over, or do you want to say it's Thirsty Thursday and let's go grab a beer? I don't know. You tell me.
You're just disturbing the waters, my friend.
It's 5 o'clock somewhere. All right, I see what you got for me.
I love it. Love that mentality. All right, so something important. Let's go over this once again. Let's just check on how we're doing. Basically, we're holding strong this area. Very important. If you start seeing that your oscillators start turning around and the price action is not fully breakout, get out of there. Head switch, because we're going to bounce back up. All right. So remember, this is danger. We're getting back. Look at that. Very dangerously. We're still having some strength on the bearishness. But if we start curling around, remember, get out of that trade. All right. So that's why I say danger. You will need to act quickly and head switch it or change direction. A couple of other stuff. Look at that. What we mentioned. No time to enter, because what happens when you finally said, yeah, I mean, it's been pumping, it's going to continue up. Oh, they get you, right? So nothing surprising here. Still, I would say wait for, if you want to jump in something like that, wait for the full retracement, get your lottery ticket here, wait a lot of time, and then whenever it does like that, well, you start taking some profits. All right, you just need to be very careful about it. Let's go in here, a couple of things. Let's go check out at SEC, and then everything is red. I want to start looking for some long bounces to the upside. All right, but at this point, nothing is like big red. But for example, H bar minus 5.1 could be INJ, maybe virtuals. Let's take a look at virtuals, and also SC or ZEC or SEC. Do I have it? Yep, here it is. So we're coming downwards in here. We're getting very close to our trend line in here. All right. So if you take a look at here, we were expecting that. Oh, don't move that one. Let's just lock it in place, lock your fibs. We were expecting this pushback, and we did almost had it. Not exactly to the same area, but there it is. And then, as we were expecting, right on the support zone, on the confirmation after your flip of the ribbon, one more candle. Oh, next one candle here at the close. That's the entry. Your stop loss in here somewhere around there. So, by the way, I know that we weren't in yesterday's class, but this is the somewhat what you should already be having. All right. We're getting back at this zone. Yes, we're losing our leading indicator, but we're flattening out. If we start pointing upwards, I'm going to be looking for a flip of the ribbon. So some entry somewhere around this area. Let me right click and add an alert to it. There it is. And I'm going to get alerted when we hit this zone. Very important. We've been, and let me see if I can clear this up. Perfect. We've been, wait. This one needs to be locked. Here is, the rest can go. We've been trending up for a long time, or ranging up. You already know, like, how do I measure trends or ranges, all right? The important part is that we could have an outlier or some retracement to the dynamic reactor. So I would not be surprised if we do something like this, all right? So the long that we are going to be taking here needs to come with a confirmation. So don't be too early to that long. Don't front run that long. Wait for your confirmation. It's better to have a small profit than to have a big loss, all right? Or any loss at all. So just saying, we are very deep pegged from the dynamic reactor. So keep an eye on this possible retracement. If you're in this trade, move your stop to entry. You should be already 50% out. And if not, it's still a great area to take some profits in here. Don't worry, if this thing keeps going upwards, you can still make some money in there. Something important is that we're losing the strength on the bullishness. That's why we're heading back lower. A couple of other thing, it's virtuals. Let's go take a look at virtuals. There is, and I think I got it right here. So it's virtuals. Yeah, virtuals. Perfect. I thought it was without the S. All right, so we're losing that supporting here, just like we're using that support in Aster. So keep an eye on Aster. So bonus tip in there. All right, and I have Aster duplicated. And in these ones, we're losing the support. We have the same pattern that we have on Bitcoin. Remember, the danger in this zone is that we're just kind of like going a little bit vanilla on the way up, right? So there is a chance where we do something like this and we gain some momentum. So gaining some strength on the bearishness. What's going to define the direction is going to be the next candle here that either it goes up or starts going back again. So that will define the direction. Nevertheless, if we take a look at our oscillator, we're still bearish. We are on reversal zones, not quite there yet, which means a little bit more downside, right? And then a possible reversal, exactly the same on Bitcoin. So we're looking for the next support on virtual. So what is going to be the next support? Seems to be, there it is, very close to it, within this area. So looking for the first area of bounce at 112. Let's add an alert here, and the next area of bounce at 0.86 zone right down there, right? So what I'm trying to get rid of is this quote unquote empty zone, right? So I'm going for the bulking here and for the bulk of the support and resistance. I know it's a little bit spaghetti, but we're running a little bit out of time. So that's what I got so far. Let me throw it back to you, Piper.
Awesome. Looking real quick here at OKLO for good old BC. Guys, I talk all the time about, look, when you have fibs, which is measured from the bottom to the top, I said, when you have fibs and you get a rejection on the 50, come up and reject, it typically is very bearish. Well, what'd you get? Right here on the 29th, rejection on the 50% fib, okay? Looking at this downside move real fast. What am I seeing here on this? Let's check this out. We got a head and shoulder pattern right there. Shoulder, head, shoulder, breakout, retest to the downside. Let's do that measured move. What would that look like? That would take us down to previous support and resistance. So we got all of our bounces here. So, dude, you could be looking at quite a freaking drop on OKLO if it loses this level right here at about 108. Be warned. Be warned. There you go, guys. I appreciate you all. You guys are awesome. We'll be here every day. I don't care who shows up. If it's 100 people, if it's 2 people, as long as Alexander G is in the chat, I'm doing my job. I'm teaching someone who cares. Till tomorrow, guys, 10 a.m. We'll be back here doing this. OC's got to go to the class, but tonight, 6 p.m. Eastern Standard Time, he should be going live for OC trade setups with OC guy. I appreciate you, bro. Get out of here. You got to go to class. I know you do. Say goodbye to everybody. Say goodbye.
See you guys. See you tomorrow. See you today at night.
It's not about the breakout. It's about the retest. Appreciate you, bro. All right, guys, we'll be back here at 10 a.m. tomorrow morning doing the same thing all over again, breaking down the news, the charts, the markets, the headlines, and everything. You need to have knowledge because knowledge is profit. Be careful. Be careful. You've been warned. We are not in the clear yet. This battlefield is still a very dangerous spot, and we're going to keep monitoring it. So join us here to find out where are we on the battlefield. Until next time, guys, trade safe, use some risk management, and as always, peace, love, and profits. Be kind to yourself. Be kind to others. Be kind to Dano Crypto. We'll catch you guys later. Peace.
That's the rap. Chart stack, data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You can't handle the truth. Emotional damage.
We'll see you at the next
They don't
one.
know what the fuck they're doing.
Morning market report out. Ow, ow.
Boom shakalaka.
We'll see you at the next one. Morning market report. We'll see you at the next one. Morning market report. Ow.
5 days a week, Monday through Friday. Don't make me work. Don't make me work. I'm retired, sir. Thank you very much.
That was awesome, dude.
Hey, it didn't break. What else you got?